Okay, well, welcome to all of you, and really, really exciting tonight. We've had an amazing interview with James Paynter and Andrew Rissik. There's a bit of a problem with the audio at the beginning of the recording, and so what I'm going to do is I'm just going to quickly run through it. The good news is you didn't miss anything from them, and literally I introduced them. I just explained who they were and how they know, and then you really hear them talking. So I just want to kind of run through this and give you the little bit of a intro. I think the most important thing in 2015, the Rand lost 34.16% against the US dollar. It lost 26.97 against the pound, and it lost 19.93 against the Australian dollar. What is also interesting is that over the last 2 years, it's lost 48% against the pound, 48% against the US dollar, 32% against the pound, and 21% against the Aussie dollar. And so this obviously has a dramatic impact on us as South Africans. It has a dramatic impact on our wealth. And one of the reasons why we've asked James Paynter and Andrew Rissik to be here is that we as South Africans need to understand this. But we also need to stop making decisions based on what is happening and just gut feel. And we actually need to use it scientifically. So I asked people, what is the CPI? What does it actually stand for? Now just give it some thought. What is the CPI? What is it? So the CPI actually stands for Consumer Price Index, and it's a basket of goods, and it's the way they track inflation. So a number of years ago, I sat with my colleagues and I said to people, why do we and how do we value our wealth? Now, whether we're from South Africa, America, China, Malawi, Malaysia, it's irrelevant. Australia, England, we need to know what our wealth is on a global perspective. We live in a global currency. We live in a global community. We need to understand what is happening with regards to our global wealth. And so we decided that you've got Consumer Price Index, but ultimately we need the GWI, which is the Global Wealth Index. And we took a basket of goods. We took things that wealthy people like to do: skiing in Val d'Isere in France, taking your kids to Disney World, putting your kid through a private school anywhere in the world, sending your kid to Harvard, being able to buy your way into America, England, Australia, ultimately having the freedom to make the choices you want in your life. Where do you want your kids to go to school? Where do you want them to go to university? Where do you want to go on holiday? Where do you want to live? Where do you want to, tithe or give your money to charity? We don't really care what you want to do with your money. What we're passionate about and what we believe our purpose is in terms of our entire team is providing people with the freedom so that they can make those choices. And that's why we created the Global Wealth Index, and we tracked it over the last 30 years. And it's quite scary. You can love me, you can hate me, but you can't fight with the facts. And I talk a lot about this in our book, Property Going Global. And if you continue listening, I'll tell you how you can get access to that. But our wealth has devalued by 29.5% as a South African, compounded over the last 30 years, which is really quite scary when one takes into account what is actually happening. Now, a lot of people get caught up in emotion, but what I've learned from wise investors is that it's about the fundamentals. It's about having systems. And really, for me, that is the reason why, a lot of people make mistakes. A lot of people lose money is because they get caught up in emotion rather than having the right information, the right partners, and most importantly, using the fundamentals. And tonight, the whole context of this webinar was to provide you with two partners that we've worked very, very closely with in the past so that we can explain to you what has happened. Because when you look at the Rand, statistically, it is devalued by more than 6% year on year against the US dollar. Now, that is fundamental as a South African. If you have an investment in South Africa and it's getting you a 14% return, and you have an investment in America and it's getting you an 8% return, over a 30-year period, it's exactly the same thing. And you really need to understand that. And so the purpose of this webinar, and we do these probably twice a year with regards to two people, is that I want to introduce you to the people that I'm actually working with. So Andrew, from my perspective, is someone that I've been working with for a very long time. Sable is, ironically, they set up my first company when I moved to London in 1999. So I've got a very long-standing relationship with First Contact, and ultimately it grew into the Sable group. I know the owners of Sable when they set it up, the founders of Sable. I've worked with Andrew for a long time. He moves all my own personal money. He moves my business's money, and I recommend him to move all our clients' money because they specialize in Forex. They make it a hell of a lot easier. They're a lot cheaper than the banks. They also, have a full end-to-end solution where they can help you get your tax clearance legally. They can basically take all the admin out of it, which is what I love. And it doesn't cost anything. They do it for free. They make their money on the margin, and but far more competitive than the banks, and that's certainly my experience. And I can't really say too much more than putting my money where my mouth is. But I think the last thing I would say from our clients' perspective is that we've been using them for many years, and anyone that thinks it all goes well in business, it doesn't. And 98% of our clients, it all runs completely smoothly, and every now and again you get a hiccup. But what I love most about working with Sable, Andrew, and his team is that they help clients find solutions. They help them find them quickly. And my experience is I don't know of one client that hasn't been happy using them. So Andrew is going to actually explain a little bit about himself and Sable, and a little bit later. I also just want to explain the other person. And sorry, just before I explain James, the reason we get two people is that Andrew is moving literally billions of rand, on a monthly basis, and he knows what's happening on the ground today. But just like when you're looking at a GPS, you can't only worry about today. You also need to look about the future and where you're going, and that's where James comes in. And let me explain a little bit about James. From this point, the recording actually works, and so you can now hear all about James. And I look forward to you enjoying the rest of this webinar. Thank you. No, all good, mate. So, and then really from James's perspective, for me, there's always two things in life. If we're getting in a GPS, we've got to know where we are, but we've also got to know where we're going. And, James is someone that, for me, I've worked with now, and I'm not sure exactly, but it must be coming on close to 10 years, where I've been following what James has been doing. I've been working much more closely with James, certainly over the last 5 or 6 years. And he absolutely fascinates me. He confuses the hell out of me in the same way that when I get in my car, I don't know how the engine works, but I don't really care because I just want to get from A to B. And in the same way, what I can say about James, and I'll let you explain it better, James, but you gave me a great analogy, I think, two or 3 years ago, where you're like the weatherman. You read patterns, and patterns are predictable. And in the same way that I, on a gut feel, can't tell whether tomorrow is going to be sunny or raining, you can go back and look at the patterns, or the weatherman can certainly go back and look at the patterns and tell me whether there's a statistical chance of it being sunny or whether it's going to rain, and then I can plan my life accordingly. For me, my understanding of what you do is almost exactly the same. The one thing, though, that I will say that I find fascinating is that your claim to fame is that your accuracy rate is higher than 80%, which is quite a statement considering how volatile the currencies are. But what I really find intriguing is that I've stood next to you face to face and done webinars now for many years, and it's actually quite scary, the level of accuracy to your predictions. And that is something that I certainly use for my own investing, and it's why I like to let our clients know about it. And like I said to you, for me, whether the rand is improving or weakening, it actually doesn't bother me. I just want clients to have accurate information so they can make the right decision. So that's really, and lastly, I would say about James as well, he very kindly contributed pretty much the whole of chapter 2. So if you left-brained and you really want to get into the detail of how he does it all, then that's the opportunity. So James, I'm not sure if there's anything you want to say. As I said, we will get the opportunity to go into your slides now.
No, I think that's fine. Scott, thanks very much for kind comments. But, what I'd like to do today is provide persons with unpuzzle the rand for them, and give them answers to their questions as to the what, the why, the how, and the where.
Cool, awesome.
Okay, pass over to me.
Thank you very much. So give me. What I'm going to do is I've got Andrew's slides here, so I'll start with Andrew quickly, and let me just open up Andrew's slides, and then I'll move over to you, James. So Andrew, if you can just give us a quick intro on your slides, and if you want to move over the slide, just tell me when you want to change it.
Okay, well that's who we are, and that's where our head office is. If you can see the slide there, that's London. You can move on to the next one, Scotty. Okay, well that's me. Next one.
Pretty self-explanatory.
Yeah. Okay, just a little bit about the Sable Group. I'm sure there's some of you on the seminar who do know the Sable Group. We started off as First Contact. We've been in business for just over 20 years now, and the Forex business is probably well, it's the second biggest contributor to our group profits, a very important business for us. And in 2010, 2011, I had the privilege of setting up our South African business and took over the whole global Forex business a year later. Last year, we had the good fortune of getting a license in Hong Kong as part of our expansion strategy. We liked the UK, Australia, New Zealand, and we thought no better place than Hong Kong than to sort of take advantage of the Eastern markets. We have sort of dipped our toes into the US. That is a very difficult market for companies like us with all the regulation, but we're actually now in the process of applying for our first license with the Massachusetts state. So we'll let you know maybe next time whether that's successful or not. So look, as a business, we've got 4 core sort of activities. We're financial services, primarily Forex. We have an accounting practice in London, and that specializes in assisting foreign companies opening up subsidiaries in the UK. We help them with all the tax and accounting. We have a wealth management business in London, which is an FCA registered business. And then obviously we've got a really big visa and nationality business, which fits in quite well with the group. And that seems to be fairly popular in South Africa at the moment, as you can imagine. My day-to-day responsibility is running the Forex business. So we employ just in excess of 200 people globally in our 4 offices. Okay, Scotty, next slide. So just a little bit about the Forex. I think what's really important, you know, a lot of people are quite trusting when it comes to moving money. We are regulated in all the environments in which we trade. In South Africa, we FSB registered. We are also audited and controlled by the South African Reserve Bank and the Financial Intelligence Center. And then in all the other jurisdictions where we have offices and where we've got big markets, we are regulated and authorized to broker Forex on behalf of our clients in all those different markets. So there's just a summary of the markets that we really do specialize in. And our real core business really is South Africans at this stage looking to externalize and invest offshore. So next one, Scott. I think what's important, and I think Scotty touched on it, why do people use us? And you know, at the end of the day, we do use an underlying banking infrastructure to be able to do our business. But I think one of the key things that individuals and businesses need is they need personalized service. They need somebody who actually makes the effort to look past all the red tape and all the hassle of helping a client and actually understand A, what a client is trying to achieve with their investment strategy, and B, what their needs are, and how we can try and make what can be quite a complex process simple. In Cape Town, we've got 18 brokers sitting in the office, and that's all they do all day. We've got a pretty strict compliance department these days. That's sadly become a very important part of the business. But our consultants are all highly skilled. They're very clued up in terms of South African exchange control. It's the one environment where we still have quite a strict exchange control environment. And as I said earlier, we've been in business for 20 years. We're doing over R1 billion a year in turnover. And that is probably about 12,000 private transfers on average per month. So you can see that we certainly do a lot of business. Hopefully clients who've experienced us do think we do a good job. And then what's important for us is helping to educate clients and demystify the sort of the world of Forex and make people realize that there are actually alternatives to using your high street bank.
I think, Andrew, you tell a great story where, and funny enough, I had the displeasure, and I'm sorry if anyone's from Standard Bank, but I'm quite happily name and shame them tonight, where I spent an hour and a half in the bank today just trying to get a debit card for 3 accounts that have my money in. I wasn't even trying to get a loan, and it was impossible. I mean, I might as well have been trying to apply for a R100 billion loan. But anyway, the point being is that you tell a great story where, you know, the client went into their private bank, was told to go off to SARS to get a form, went back, you know, to the bank, told that's the wrong form, you know, et cetera, et cetera. I don't know all the details, but and then they met up with you guys. And one of the things I like is you provide an end-to-end solution. You help people with their tax clearance. You understand what needs to be done so that legally you can, you know, do everything properly, but quickly. You see SARS, my understanding is at least once a week, if not twice a week. so that it's a regular occurrence. And basically, this guy who worked in a bank or something had all this drama, and you got it done within like 48 hours or something. I can't remember the exact stuff.
Yeah, those are the good stories. I mean, this guy spent almost the whole day standing in the queue at SARS to get a tax clearance to move, I think it was 300,000 Rand. And when he got to the end of the queue, they said, no, you actually don't need a tax clearance certificate. So he went back to Standard Bank, and they still disputed it anyway. Long story short, we did it for him. We did it very quickly. He had the money the next day in his offshore bank account. Look, the framework in South Africa has relaxed quite a lot, but the surveillance and the various details around the different allowances are fairly complex, depending on your status, whether you're resident, non-resident, etc., etc. So those are the sort of things that we can unravel pretty quickly. The other thing as well is that everybody probably knows that from the 1st of April 2015, the capital allowance for individual South Africans went from 4 million to 10 million Rand. And interestingly, we always wondered, what sort of flows we would see when that happened. And it was a funny thing, when they opened that new allowance up to 10 million, we've seen some severe flows. And, my advice to people has been, use your allowances whilst you've got them. And people really are. And I think, offshore has to be part of your strategy.
The last thing I would say, and then I think if I can move over to James, the last thing I would say as well, I had this just recently. My wife was trying to move 6,000 euros back to South Africa for a charity. I said, well, why don't you use Andrew? And she goes, oh, no, it'd be cheaper if we use the bank. And that's the very different, very wrong mindset, because I, again, move all my own personal money with Andrew, and all they do is take a margin on the spread. They don't charge extra fees. And really, I just think it's important, just at a simple level, how you guys make your money is on the margin. But it's, from my experience, it's a hell of a lot less than what the banks are doing anyway, plus all the fees they're charging me. So it's just an efficient mechanism to be able to work. So there's the different contact details. But I mean, really tonight is about getting into your brain, Andrew, and more importantly, what is happening. I want to move over to James here. So James, I'm going to give you the dashboard here so that you can actually drive from your side, and you should be able to get control of the screen now. And James is going to give us just a bit of an overview of who he is, what he does, and how he does it, so that hopefully you guys all have context with Andrew and James, both the present and the future, and then ourselves, and then we can get into the questions. We've got some great questions coming through here, and so I really want to get into the detail as much as possible. So James, if you
thank you.
Be able to just go share your screen.
I'll just, okay.
There should just be a pop-up button coming, just going share my screen. Yep, perfect.
Yeah, that is, are you seeing it?
Yeah, we got you. So, yep, we're perfect. Over to you, James.
Yeah, so I thought I'd just start with a few questions. The Rand and the enemy. And this is what we ask clients. Whether they ever feel, and I'm going to ask persons now, all of you that are attending, do you ever feel that the market is against you?
I certainly do, James. I always joke, but whenever I move money out the country, then the Rand will increase in strength, and if I'm moving money back, it goes the opposite direction, which is one of the reasons I found you many years ago.
Yeah, so I mean, that's what I've got there. You almost feel like there's someone looking over your shoulder, just waiting for you to exchange so that they can leave it the other way. And the funny thing is, that almost everyone feels like that, and that there is a reason for this. And there is an enemy, but it's not the one you think it is. And that's really the essence of our business, is we educate clients about the market, what actually moves the market, and how you can use that, and through the tools and solutions that we provide, we actually empower our clients to optimize the exchange transactions. So we do that as our prime service is providing forecasts on the dollar, euro, and pound versus the Rand. We also provide exchange timing tools, and then we also assist clients with getting improved pricing and forex facilities, and provide ad hoc forecasts on other financial markets. Just a short intro myself is that I haven't got an economic background. I've got an engineering background, but I've been in offshore investment management since 1993, and that's where I got introduced to forex, and became fascinated with what moved the markets. Since 2005, I've been forecasting financial markets with consistent accuracy for hundreds of clients, including leading industrialists, automotive, aviation companies, large corporates, and apart from the Rand, we've also called some major market terms. But perhaps just an intro as to where my history is. We started back here in 1993 with our offshore investment management company, which was in stainless steel tank containers. And as you can see, the Rand moved an offshore investment dream from there up until 2001. Now, the funny thing is, at this point here, the way 2001 we hit 1385. I don't know how many of you remember that day when that happened. We've had a similar day just last month, where at that point in time we said to ourselves, are we going to cover in our export proceeds, because it was dollar income that we were earning? And we said no, but everyone's talking about the Rand going to 20. So we left open our position, and instead we took import cover at about 1350 or so to cover some of our shipping costs. And as you can see, that was a disaster, because over the next year and more, the Rand strengthened all the way back down to 560 by 2005. And now we took a massive hit here and eventually cancelled some of our FEC down here in 2003. So that was my start of my journey of discovery in what actually determines the Rand's true value, because we said to ourselves, what has actually caused this? What has made the Rand swing so wildly? And why did we buy dollars when we should have been selling? We should have been selling at those high prices, not buying. And whether there was any way to prevent that happening again, and more importantly, where was it heading from here? When we were sitting back at 560, were we heading further down, as some persons were saying, or were we about to turn around? And that's a bit of what I want to share with you tonight, is the answer of those questions. So if you look at the Rand's history, what determines the long-term trend? We've got a linear trend line there, which is coming through at about 1070, I think, 1080. What determines that long-term trend? But then also, why do you have these huge swings, of which we've had this major one this past year? And we've covered this before, Scott, so I won't go into it in too much detail, but the exchange rate is there to compensate for changes in cost of goods and services between two trading partners. And while there are many factors, these come down to two core factors, and that's change in productivity and change in labor cost. And if you look at how South Africa has performed on the productivity front, we can see our trading partners in purple there and South Africa in light blue. And you can see from 1981, where we have 31% of our trading partners in terms of productivity, that is halved. So the rand needs to adjust because we're less productive than our partners.
James, I'm not sure where Henny got it from, but Henny told me last week when I saw him that we're now as productive as we were in 1899 before the Boer War. But anyway, that's what he told me.
Okay. Yeah, and then labour costs. It's not a very good picture either. And from 1981, we were 34% in terms of unit labour cost. We broke even about 2009. We are now 130% of our trading partners. So both those are negative, and because of that, the rand needs to depreciate in order for us to remain competitive. And what I did was here, I just put that into, that feeds into producer price inflation. And if we look at the differential between the US and ourselves, since 1970, this blue line, we can see that the rand is needed to adjust from these levels up to, I think it's high, close to 9. If we take inflation, and if you take it from 1957 further back, well, I took 1970s, that's when the rand was still fixed against the dollar. But if we take it further back to 1957, where we've got inflation information from, that brings us close to 12. Now, at an average of those two, we're looking at about 1030 or so, with an average depreciation over a period of time of 5.7%. So now you can see why fundamentally the rand is needed to depreciate, but we can also see here that it doesn't explain these huge swings. So there's something else happening here. And I'll just show from a trade-weighted point of view as well. If we look at the trade-weighted rand, we can also see there a trend, the trend line, and the trade-weighted rand. So it's not only dollar, and we can see these big swings from undervalued to overvalued, undervalued, overvalued, and now we're sitting undervalued at the moment. So what is causing those huge swings? What we perhaps need to just have a look at is, and give us an idea of where the reason for those big swings is. If you look at the rand market itself, the actual turnover in 2014, we haven't got updated figures for 2015, but was $20.3 billion per day. So all
that's why Andrew's like chief in charge of his company, because of all that trade moving back and forth.
Yeah. the interesting thing, Scott, and others there, is that, and I've highlighted here, only 4.4% of that relates to actual trade of goods and services. All the rest is speculative and investment based. So 95.6% of it is speculative. So whereas the exchange rate is, from a fundamental point of view, needs to depreciate for goods and for the sake of goods and services, only 4.4% of actual turnover relates to goods and services. So it's these guys that are actually moving the rand, not these guys, not the importers and exporters, but the speculators. And that's everyone that's infinite trading the rand from a financial perspective. So it will be you guys, Scott, the property, you know, whether it's into the stock markets, the money markets, the bond markets, trading forex itself, you name it. That all is speculative and investment based. So I had a question here, you know, what then actually moves the market? if those are the guys moving it, what then actually is making them move the market? And perhaps you should have put it in there as a question to all you that are attending. But you know, what do you think moves the market?
If anyone's got any opinions, chuck it in, and I'll say it out. So mass psychology. No one else knows. Are there speculation, corruption, Zuma's mouth?
I think that's corruption.
Sentiment, incompetent government, SUPTA, international confidence, politics, news, political discord, nene, emotion strikes, ZUPTA, ZUPTA, perception, nene. I think we get the point. Perception of South Africa, SACP, all of the above.
Okay. Well, we can put it this way: they're all part of the puzzle. But what I want to do here tonight, Scott, is put it all together in a nice analogy that I recently thought up that I think will explain it very nicely and unpuzzle it for everyone. So we look at the rand at the bottom there. What you can think of is the rand like a seesaw, or what affects the rand is like a seesaw. So we've got all these positive factors and we've got negative factors. All right? And some are bigger and some are smaller. Some are more positive and some are more negative. And there are thousands of different factors. We've had some of you saying what you think they are, but there are thousands of bits of information coming in affecting the rand. Now, some are economic, some are financial, some are political, some are social. That's data, events, and news. So the traditional way to look at that is the fundamental analyst. And what he does is he looks at this information and he says, well, you know, this bit of data, big bit of data is coming out tomorrow. If it's more positive than we expected, the seesaw is going to turn, it's going to be more positive down, it's going to move the rand down. Make sense, Scott?
Yeah.
And on the converse side, if that actually turns negative, we're going to push this side down, we're going to push the rand up, weaker. So that's how most persons look at the market. But the problem with that is you can never know what all these factors are. And you can never know what their magnitude is or how positive or sentiment they are. It's just an impossibility. So this guy, when he's telling you that he knows where the market's going, he's really saying he knows everything that's affecting the market at any point in time. And he knows the magnitude and the positive or negative impact it's going to have. And that's just impossible. You just can't do that. So this is actually an illusion to think of it like this. Because that's not really what moves the market. What moves the market is a seesaw. But it's persons. Persons move the market. And that's that whole market I was showing back there, that $20.3 billion per day. That's all these millions of persons, whether they are hedge funds, bankers, exporters, importers, investment managers, persons trading the forex. There's a massive market here. These are the guys that actually move the market. So what happens is, you've got some guys that are negative, and you've got guys that are positive. And generally what happens is these guys look at the negative factors, and these guys look at the positive factors. And some might even think that some of these positive factors are negative. And so they take a position on where they see the rand going. And then what happens is if more persons turn positive based on some event, it pushes the rand down. if persons turn negative, more persons turn negative, it pushes the rand up. And that's actually what moves the market. It's not these events here. It's these events and data filtered through these persons here. And that's what moves the market. So this guy, when he says he knows all these factors here and how it's going to influence the rand, what he's actually saying, he not only knows all of this, but he also knows how all these people are thinking, whether they're positive or negative. And that's just impossible, again. So, you know, where does that leave us? Well, once these guys fight it out, we get a price. At any point in time, we've got a price. So today we are sitting somewhere at 1574.35. That is the market. This is the summary of all this information filtered through all these people at this point in time. So here we've got precision and measurable figure compared with all this complexity and unknowns, and here a lot of unknowns as well as to where persons are positioned. But they fight it out and we've got price. And what happens is, you know, this information doesn't remain as it is. And these people, as they take positions, what we find is the market moves. So as these persons turn positive and negative, over time we get in the market moving up, then down, up and down, as we got it like this. Now what is this a pattern of? Is this a pattern of this down here? Is this a pattern of financial data? I think most persons think that this is a pattern of financial data, but it's not. It's this information filtered through all these millions of persons here. So these are patterns produced by persons. And you know, if you did this before, Scott, but 90%, and it's a proven fact, 90% of our decisions are emotional. And then we rationalize them with logic thereafter. So what these patterns here are is patterns of mass sentiment. And as we know, in similar circumstances, we tend to do similar things. So those patterns recur. And because they recur, they are predictable. So as you mentioned earlier, Scott, you can think of it like the weather forecast. Go back to Hurricane Sandy a couple of years back, I think it's 2012, that they were able here to predict exactly the path of the hurricane. Wind speeds and everything. And why they could do that is because they'd analyzed past weather patterns according to the laws of nature. Weather moves according to the laws of nature. And because of that, they repeat themselves and make future patterns predictable. Now, just the same, as humans, we do things. Our patterns of human emotion also repeat themselves, and those are, you can call it like this, they abide by the laws of human nature. And what that does is it makes future patterns predictable. Just as a weather forecast, you can't always get it right, but if you know how past weather patterns have progressed, and you know the laws that govern them, you have a very good idea as to what weather is coming next. So that's the basis of what we do, but there's what's in there is something that's very we've got this there's something that's within that's very important to understand. The basic, I'm not going to go into too much detail here, Scott, but how the market moves is is in trends and counter trends. And once you get a market moving up, I'm getting some repeating here. I don't know why.
I'm not hearing an echo on my side.
You're not. Okay. So if you get a pattern, market moving up, counter trend, and then you're getting the trend recommencing again. But why does a market trend? Why do we get the market moving up to the extreme and then we get it moving back down? And if you go back to our seesaw, what you find is that this point here, that everyone is Rand positive. So there's no one up this side. Everyone's down here. There's no one left to push it further down. And then we get some wise guys that start moving up here and turning negative and getting the market move from the bottom. As the market moves up, this levels out. So we've got persons that are positive and we've got persons that are negative. Until we get to a point in the extreme here where everyone is turning negative. Now, at this point, there's no one left to push the market weak. And you get the wise persons, which are the few, that actually now see the market's at an extreme and start turning the Rand.
Muted.
But based on that, there is a hidden enemy in this, and that is that
Unmuted.
our emotions are worst enemy. Because at these points of extreme here, our emotions are telling us to be exactly the opposite of what we should be doing. So here, everyone's Rand negative, as we've got at the moment. Extremely Rand negative. And down here, everyone was extremely Rand positive. So your emotions are telling you to do exactly the opposite of what you should be doing. And that's why we tend to make those wrong decisions. We tend to be trading to exchange at the wrong time because we're listening to our emotions. So as Warren Buffett said, be fearful when others are greedy and greedy when others are fearful. So that's what he goes by. So the only way to overcome that is therefore to actually control yourself and eliminate your emotions from the decision-making process. So as you found out, Scott, you need an objective view of where the market's expected to go, and a system to as to when the optimum time to exchange is. You cannot go by your emotions. And what that does is enable you to make objective, informed, and educated decisions, and to take action at the right time. So I'll just give an example here that, back in 2012, when the Rand was sitting at about 750 or so, we forecast a move up over the next few years into the 14 to 2050 area.
And two things, James. Two things, James,
Yes.
just before you move on there. One is that I've had the privilege of dealing with a lot of wealthy people around the world, and successful wealthy people tend to have a system and they stick to their system. So exactly what you just said about moving away from emotion, where you plug the numbers into the system or you plug the fundamentals into the system and it makes decisions for you, which helps them improve their accuracy over and over again. And the second thing was, I'll never forget when you were showing these graphs and we would ask you what the accuracy ratio was or the predictability ratio, and you were like, well, it's 80% that it's going to 20% that it's going to happen quickly, 80% that it's going to take 3 years, but 100% it's going to happen. That would be 14 to 20 to the dollar, and now everyone sits here at 1550 like looking surprised, and it blows my mind.
Yeah, well, it's actually surprised me as well, but that's yeah. When we updated that, we had in 2014, we forecasted 80% probability of a move down. there was a rand sitting at about 11.15 there, and then up into that 14 to 21 area. Now that was our long-term forecast back then, and as we know, that's what happened. The rand came down, and then we hit 14 late last year, and a lot higher. So now that's the beauty of having an objective system that gives you a view of the future based on past patterns.
So from your side, James, I mean, obviously one of the things that it gives me a very good context, and I always learn something every time you do it. In terms of getting into the debate of where things are going, in terms of, I think people have got a good understanding now of how you do it and what you do. One of the things I think that's really important tonight is that while we've got the two of you online, is that we really kind of get into some of the detail around what you think is happening, and more importantly, where we're going, and so that people can make those type of decisions. And I think in terms of your reports and information, there's plenty of information out there where you share with people. But what's interesting now is being able to analyze it and to look. And I mean, I've got loads and loads of questions coming through here, asking different things around different scenarios, etc., etc. So I just want to make sure that we've got enough time to really be able to get into the question side of things.
Yeah, that's right. I haven't really got anything more, on the what, the how, and the why.
Okay.
So I'm sure people are wanting to know more about the where, but if you wanted to perhaps start with the questions you got.
Well, I think one of the questions that I'd like to start off with, and from your perspective, Andrew, you've mentioned it, and the one thing that I've always fascinated me when we've had a discussion between the three of us is that obviously taking human motion into account is really something quite important, and tracking where the rand is going. But from your perspective, in terms of the day-to-day functions and things that are happening on the ground, what are you seeing as the major pain points or motives that people are doing and making decisions based on what you're finding on the ground, Andrew, and these capital flows at the moment?
Well, firstly, James, I think your unpuzzling of the rand is actually a very brilliant and I think quite an easy to understand way of understandable way of looking at it. And exactly what Scott, what James said is the enemy is human emotion. To give you an idea, the Reserve Bank produced some figures during the course of the fourth quarter of 2015, saying that in Q3, I think 2.5 times more money was externalized in Q3 than in Q2 2015. We looked at our business's numbers, and it tracked exactly what the Reserve Bank was saying, inflows versus outflows. And the two record months that Sable had was December 2015 and January 2016, which was straight after Nenny Gate. So I think that currently it's really sentiment driven, and it's human emotion, and it's exactly the opposite of what Warren Buffett said. When people are panicking, that's when you should be possibly buying rands rather than selling. But everybody's selling at the moment, and we can see that. It has come back a bit in the last 10 days.
So if we were to take sentiment, and I feel that sentiment as well. And one thing I want to be very clear on, personally, and it's just my own belief system, is that, investing in real estate, if I was a forex broker, it's really important what's going to happen over the next day or the next month. But if I'm a property investor or a real estate investor, I take at least a 5-year view. And if anyone kind of wants to invest with me or us to help them, if they're less than 5 years, then I prefer them to go and speculate with someone else. And so therefore, for me, when James is looking at stuff where he's giving a 3 to 5 year view, and at the time we were sitting at 880 or whatever it was, and he was telling us 14 to 20. That's what's really important for me, is those long-term fundamentals. But I think what a lot of people would be wanting to know, James, from your perspective, is where Andrew is telling us what's happening on the ground. He's telling us about the market movements. He's telling us about the concerns even in terms of what's happening with the junk status and whether we'll even be able to move our money. Because that's the one thing I learned from Zimbabwe, is that just because the rules say one thing doesn't mean it doesn't change. So you kind of got to play the cards as they land on the table. And but I think we need to have the balance between the two. It's not only the negative sentiment. Where do you see us going, James?
Well, what you've seen the past couple of months is extreme sentiment, and that is a picture of an end of a trend. So and if are you looking at my screen or
sorry.
not show?
No, sorry. It should be your screen now. Yep.
Can you see it now?
Yep.
So if we look historically, from the 1970s on, we had a trend up here. The market was trending up to the 1385 in 2001, and then we had a counter trend move that lasted about 10 years to 2011, and since then we've had this move up since 2011 up until January last month, and that is traced out 1, 2, 3, 4, 5 waves, which is the end of a trend. Okay, so we are now in another long-term trend, but we are needing a correction of this particular move from 2011 to 2016. We're needing a correction of that before we see more weakness. So what happened here is we said similar to 2001, where the market, this fifth wave here, 1, 2, 3, 4, it could have ended here, but with everything that was happening, it's actually that extended itself into another further 5 waves here. So it was a real spark that was very similar to 2001, and you can see what happened after 2001. That once that was complete, we actually had quite a substantial reduction. I don't see it being as substantial because we're in a longer, the start of a long-term trend, but definitely a move down to 14, but very likely lower.
So James, do you have just as my interest, do you have some of your? I pulled up your graphs today in terms of the short, the medium, and the long term. Do you have them on your slide, or can I pull them up
I
on my
don't have them
slide?
on the slides, but I can go across to the. I've got them pulled up on my browser.
Okay, I think it's worth just kind of giving an indication. As I know that tonight you're going to give people that are online an option to be able to get access to this report for free for 14 days. So we'll share those details at the end. So I don't want to spend too much time reading through the reports and stuff because people will get access to that. But I do think it's just important to talk it through, because when I first looked at some of these graphs, I don't know how you felt, Andrew, but I did feel like the dumbest guy in the room, not really understanding what was going on. And I think just if we can kind of just have a quick high level overview of what you think is going to happen.
Okay.
So we're seeing your PowerPoint at the moment. Oh, there are you changing. Okay.
Right. So just go to the. Here's our forecast area that we give to clients, which has got 4 time frames. So we've got the long-term outlook, which is the next few years, the medium term, the next few months, the near term, the next few weeks, and the short term, the next few days. So, to get to start with the longer term outlook, we've had this move up into this area. There was a possibility of this going a little bit higher before collapsing, but it's looking pretty much like now that we've topped out. And we're expecting a move down into the 14 to 11.25 area, possibly lower, before we head up again.
And when you say head up again, so we got the 14 to the 11.75. When we head up again, what trajectory are we looking at over a 3 to 5 year term?
Yeah, well, it will be above the high that we saw last month. So above 18, very likely above 20, 21.
And what sort of time frame are we looking at with regards to
that? This move up here was from 2011 to 2016. So that's 5 years. We're likely to take at least a year to correct that, and then another 2. We're probably looking 3, 4 years out from here.
Okay.
Perhaps a bit longer to get back up. So it will take a bit of time to correct down to this area.
And if we look at the medium and the short term?
Medium, we're expecting to move down the next few months down to 14.55 to 12.50 area. And next few weeks below 15.55, which is, next few weeks, and then next few days below 15.63. I think we've been just sitting just above 70, so we're kind of almost into there. But they're expecting some more weakness before we have some consolidation, and then further weakness again. And when I say weakness, I mean dollar weakness.
Yeah. And Andrew, from your opinion, what are your thoughts on, in terms of, obviously one looks at the predictions and then obviously there is sentiment and what's happening. What's your feeling in terms of just the capital flows? Because the one thing that I'm certainly finding is that a lot of the money is that I'm dealing with, and I'm not talking about the 23.8 billion I wish I was, but the point being is that it's kind of a one-way direction. It's going to find a home elsewhere. It's not floating back and forth trying to trade the currency. What's been your, what are you finding on the ground? What's actually happening? Is what we're dealing with different, or what are you finding basically?
Yeah, I think if you look at the technicals and what James is showing us, the one fundamental thing I think for anybody looking to exchange and move money offshore is, what is your period in which you have to make that investment? In other words, if you've got 6 months to move some money off, it's a very different decision than if you've got to settle on the completion of a property in the US next week, for instance, because your time period is going to determine which one of those graphs you're going to look at. Sadly, at the moment, what we're seeing is, and I'm seeing guys who chartered accountants, professionals, people in the banking sector, who are literally moving what they can move at the moment. Now, if you, in the cold light of day, look at what James has just told us, really you shouldn't be trading now. Now we've gone into a strengthening cycle, and it's showing on all the graphs, and the reality is that in the last 2 weeks it's strengthening. And so what I'm seeing happening on a daily basis from private investors is exactly the opposite of what we should be seeing. Guys who import South Africa at the moment, we import more than we export. And, when an importer has to make a payment, he has to make a payment. So unless he's taken cover, let's say he's got to settle that invoice before shipment's released, he's really not in a decision-making position as to when he exchanges. Your private individual, a lot of the time, when they're just literally moving money off to an offshore bank account, actually should really be taking heed of this information. Because sadly, there are going to be guys who moved money last week who, in 2 weeks' time, if this is correct, are going to be really upset. I suppose the one question for James would be, you know, what would the curveball be if we get a ratings downgrade?
Well,
Is that already priced?
Andrew, you beat me to it. Donovan Murray asked the exact same question, basically.
Yeah, there's going to be a bit of emotion, but that's reality.
Yeah, I can't say, Andrew. You know, all I'm saying is when you know, if you look at that little analogy that we put together, that at the end of the day, it's sentiment driven. That you know, that sentiment that drives the market. And I don't know why at the moment it doesn't seem like there are any good reasons why the rand should strengthen. But if the patterns are right, as we see them now, those good reasons will come to light. And you know, persons will start turning positive. You know, whether we have a decent budget, whether there's you know some good results from local elections and the like. I don't know. But what the patterns are saying is that we've reached an extreme and we need a major correction back from there.
And tell me, I mean, this is a question for both of you, and it's a question, I know, James, that you focus on the pound, the euro, the dollar. I'm not sure if you do the Aussie dollar as well, but you know, because the next question is as well, even if I was looking to get my money offshore, you know, where is the better place to be putting my money? Not necessarily investing in real estate. That's not what I'm asking. I'm asking more from a currency perspective, both on the patterns and just the fundamentals. Andrew, where do you guys see the, you know, what if I take my money out of rands, what's the best currency to be putting it into?
Look, I think that it's like any investment strategist. I think they're going to say to you, you know, look at a balanced portfolio. I suppose it depends on what your risk appetite is. But if you're looking just to hedge the rand by buying another currency, is probably to look at a basket of currencies. And maybe the good thing to do would be to start with the three that James is analyzing, which is the pound, the euro, and the dollar, and make some decisions with his predictions in mind. I think another interesting one is always the Swiss franc. You know, although having said that, you know, with all this common reporting standards, and there's probably going to be quite a lot of money washing out of Switzerland in the next couple of years, maybe that's not a great currency to be investing in. The Aussie dollar, if you look at the depreciation, I think, Scott, in your earlier slides, there's been a much lesser of a devaluation against the rand, you know, the rand against the Aussie, because of the commodity effect. So I think we've also got to drill a little bit into some of the fundamental issues that affect the rand. And I think that you know, there are three sort of big bubbles of influence at the moment, or maybe four. One is the rand is a commodity currency. So we just know that there's a commodity slump at the moment. So I think we're going to be under pressure there for a while. We're an emerging market. I think the emerging markets are all very flat. I mean, very recently, Russia and Brazil were both downgraded to junk status, investment status. I don't know if we're going to follow or not, but we kind of get hit in the emerging market scenario. Everyone seems to be running for hard currencies. And then the third one, and I mean that's the big one, is the speculation. You know, that's the swings and roundabout stuff. But you know, throw into that the pot of poor economic management by the ruling party. I think that everybody's kind of fearful that, you know, I mean, Jacob Zuma's done it. I mean, what he did in December, and you know what he just tends to drop bombs every now and then. Maybe he's being reined in now. I don't know. They spoke, you know, it sounded quite positive listening to the State of the Nation, but I think the reality is we've got to see some good deliverables. So I would go into something that doesn't look like South Africa and just balance. So get out of emerging markets, get out of commodity currencies, and maybe look for something a little bit different. Certainly, a major currency mix would be good.
James, from your side, with the Elliott wave principle and what you know in terms of the different currencies, what's your thoughts on that?
Scott, if you ever look at some of the majors, and one you've been speaking about, let's say take the euro and the Aussie dollar, Canadian dollar as well, that all of those have been very weak against the dollar. But all of them are showing signs that that trend is either very mature or has reversed. So, against the dollar, those all can be are expected to strengthen. Short term, it could be that the rand will actually strengthen more than they strengthen against the dollar, because the rand, the rand weakened more than virtually any other currency last year. So it's looking short term like there might be a recovery against those currencies. So you were talking about the commodity currencies, Andrew. That's Canadian dollar and Aussie dollar are two of those. One that one of our clients has been looking at has been the Norwegian kroner as an option as well. And it seems like it might be quite a good bet.
I want to get into some of these questions here. There's some really, really good questions that are coming through, and I think the whole purpose of tonight was to really kind of, tap into the brains of what people want to know. So, Dieter Hinzer asked, what are the views of the rand retracing all the way back to below 10 to the dollar, similar to what happened in post-2001? James, I presume that's probably best for you.
Yeah.
Perhaps it might be worthwhile just showing my screen again.
We're on your screen. We're on your screen.
We're on my screen.
Yep.
You see it?
Yep.
So the chances of that I don't believe are high. We've got, as I said, we've had a trend and a counter trend, and now we're into a new a multi-decade trend weaker. And this is just the first leg of that. So this is just going to be a retracement of this wave. This was a retracement of this full wave here. The best case scenario would be a move back down to about 1025. But I don't see it lower than that before the long-term trend recommences.
Okay. And then Dion Winterbach, I mean, I think you've answered this in many ways already. What are your views on when is best to take the rand offshore? There's different pros and cons to this. You've obviously got the statistics and effectively the graphs to prove it. Andrew's obviously given a slightly different context in terms of what's taken into account. For me, there's one thing I would like to say here, which, well, actually there's two things that I think I've learned from experience. One is from Ian Fife, who, if people don't know, he was the property editor of the Financial Mail. And he said something right in the heart of the global financial crisis in October of 2008. And he said, people get so caught up in the emotion and, the whole Warren Buffett thing, you make money when there's blood on the streets, et cetera, et cetera. But at the end of the day, when you're looking at buying assets, it's either a good asset or not a good asset. And you need to make decisions based on what is sitting right in front of you, because all of us have crystal balls as much as we want into the future. And that's one thing. So that was one piece of advice that Ian Fife gave me, that, we can predict the future as much as we want, but we also need to, take the actual facts as to where we sit at the moment. The other one that I think is really good, and what I love about successful people and people that are respected, is often that people try and make things look really complicated, and actually it's about dumbing it down. And Kim Sunter, when asked, I was in the room when he got asked, and they said, listen, should you move your money offshore or should you keep it locally? And he said, it's really simple. Like, if you're 100% positive about South Africa, then keep 100% of your money in South Africa. If you're 50-50, take 50% of your money offshore and keep 50% locally. And if you're 100% negative, well, maybe don't leave, but take 100% of your money offshore. And, for me, when you look at it, it's like such common sense, and it's just kind of, there's no right and there's no wrong. It's kind of just, it gives you peace of mind, because you might be able to win a little bit on the currency either way. But I can promise you that I've owned property in London since 2002, and I've never regretted a day of it. And I don't lie awake at night worrying about whether the rand's going up or down, because I own offshore assets in a first world currency that earn a first world income. And, for me, we've got a whole breakfast around this where we're going to explain this a lot more. And I can go into detail around the freedom calculator that we created. because many years ago, 3 years ago actually, James, I think it was about a 20% probability the rand was recovering, an 80% probability that it was going to continue to weaken, and yet everyone I spoke to was sitting back and going, oh well, James said it's a 20% probability that it's going to recover, so I'm going to sit back and wait. And again, just like you said with the system, James, I don't believe in making gut feels. So I plugged all the numbers in. I took a 30-year average backwards. I put it in forwards, and ultimately it showed us the results. And what was fascinating is that not based on sentiment, based on pure scientific calculations, you would be 10% better off if you took action today versus gambling on what was then a 20% probability. And yet most people gamble on the 20% probability. And at the breakfast, we'll be sharing with people that freedom calculator and how they can plug your numbers in along with the global property system so that they can make educated, informed decisions over the next 3 to 5 years. And so that's a long answer to Dion Winterbuck's question, but it's really kind of, putting common sense, marrying it together with a system, and then hopefully, the whole purpose of things like tonight is people like Andrew, people like James giving you the right information, or you certainly knowing where to get the right information from them so that you can make the right type of decisions. So that's kind of my feeling in terms of what's said there. There's another great question here that I just wanted to ask basically, and it's from Andrew Cooper, and he says, you said in October at the Wealth Movement event that there's 5 peaks of trending upwards on the Elliott, normally 3 times town, blah 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 blah. Based on this, when do you see the rand bottoming out roughly? So in simple terms, it's your Elliott wave principle, and when do you see the rand bottoming out basically?
Yeah, so if we look at the long-term trend here, we've had a 1, 2, 3, 4, 5. And what happens if you just go back to what we showed you, look at it here in terms of how the market moves. That once that happens, we get a 3-wave correction, partial replacement of that 5-wave move. So if we look at, go back to our chart here, this isn't expected to be a straight down. We actually will be a 3-wave move down into this area, and it depends how the next couple of months will progress to give us much better idea as to how far that's expected to go. But we're looking to at least 14, more likely 12.50, and possibly below 11.85.
But James, in terms of, again, it's how long's a piece of string and it's how good is your crystal ball, but yours is better than mine. What, give us a month. When is the bottom point of, when is the bottom of that red dot ideally? Like, just, is it 6 months? Is it 12 months? Is it 24 months? Where do you see that?
I'm looking probably 12 months.
Okay. So over the next 12 months. So, we can marry together, Andrew, what you said. You can marry together quite a few of the flags that are happening from a political perspective, from an economic perspective, and we can also look at that over a 12-month period to see, whether we're going in the right direction. There's a great question here. Clive Miller actually asked, and he said, the two figures quoted, the 6% annual decline and the 29% compound decline. The correlation between the two, Clive, is that while the rand is devaluing on the one side, asset prices are going up on the other side. So you have an inverse effect over the long term, and that's the challenge on that side. I'm just looking here. Do you agree that? Just an interesting one. Andrew's asked Andrew whether you agree with 96% of the rand's movements is due to speculators. I don't know. I know you're not moving all 23.8 billion, but from the capital flows you're using, the 12,000 that you are doing per month.
So 96 speculation, I don't think it's pure speculation. I mean, I think what James was saying was 4.4% is actually import-export trade. And that's really where the true rand should be. But the speculation is not just the day traders or the intraday traders and guys buying and selling the currency. It's actually funds. It's all sorts of investment houses. I mean, that's not necessarily pure speculation, but I mean, it is speculation in a way, because it's not capital that's coming into. I'm not exactly sure, James, you'll probably know better than me, the percentage of rands that are actually traded on a daily basis offshore. You must remember that most of the rand trade that happens doesn't even happen, inside our own borders. It's happening out, beyond the reach of the Reserve Bank. So, that's big institutions. So, you might find what's happening now is they're talking about a possible ratings downgrade. Fund managers are going to start looking where they're going to put that money. Some people are already starting to pull money out of the market. We're starting to see those kind of outflows. That's going to have an impact, on the market, definitely. But, at the moment, there's a short-term strengthening happening because it's a reaction to that big spike of 18 that happened a few weeks ago.
Just to cover your question there, Andrew, we're presently sitting at 61% of the turnover against the rand is non-resident.
Yeah, that is a substantial amount of impact when you think that's completely out of our control.
Yeah, and if you compare that to, if you look at, that's the red line here. Back in 1990, it was sitting at about 4%.
Yeah. So that's one of the pains that's come with the new South Africa, where we entered the free market. I think it was in '95 when we went into the free trading, and we basically 24/7 tradable now, and whilst it's good in a way, I think it's terrifying to be an importer and exporter because things can turn against you and either make you millions or can sink you very quickly.
Yeah.
Just a quick question here. There's a question from Stefan Pinar. He said, would it be wise to move the weak rand to the New Zealand now to buy real estate, or wait for the rand to strengthen to, say, 12 rand to the dollar? The risk is that properties in New Zealand could rise more than the rand. And I think, Stefan, that's what I was trying to say earlier, that it's not there's not only one element here. And that's actually why I created the four-dimensional model, which we built on top of Clem Sunter's model, the global property system. And I mean, just by the way, we've got the breakfast next week. And if anyone wants to go to the breakfast, just write in the chat box breakfast, and we'll make sure we send you the details, especially if you've got to go. But, these are the reasons that we have these systems. So the global property system plugs in the fundamentals, and it helps you make these decisions. The freedom calculator is exactly that. I mean, I had the same concern in America 2 years ago when the rand was possibly going to recover, etc. Should I be buying quality assets, or should I be waiting for the rand to recover? And I don't believe in making gut feel decisions. So not only myself, all our asset managers all have access to these tools and calculators to help people make the right decisions versus making gut feel decisions. And one of the reasons that I'm so grateful to Andrew and James tonight is that they share their skills. I don't proclaim to be an Elliott wave expert, and I'm never going to, but I know where to go and get the right information, and that's what we like to share with people so that they can make the right decisions for themselves. Because I'm sick and tired of watching South Africans make the wrong decisions based on sentiment, losing money, and basically taking opinions from people that are earning fees to give them opinions. I think let's just look through here. I don't know which one wants to answer this. How do you think the American elections will affect the rand dollar?
James, have you built that into your model?
No, I haven't. I suppose it depends if Trump keeps talking. But it's interesting. Have these questions often coming through? What will happen if you get this positive or negative news happening? But I think what's important to understand is that if I'm in a positive frame of mind, I will discount what is negative. And if I'm in a negative frame of mind, I'll discount what is positive. And focus on the opposite. And what you find is that when often a turning point will in a market there will be an event like we had, around the Gate and Zuma saying, people overreacted and all that sort of thing. It is centered around an event, but persons are at that level of sentiment to take that view of what's happened. So we've had this extreme spark as we've had, and now we're in the start of a strengthening trend. So, wherever the market pattern is by November, that the events that happen out of the States will be confirmed by the pattern. So, if there's still positive sentiment, persons will take a positive view on it. But if it's turned negative, then persons will take a negative view on it.
Can I just quickly, James, and I do think it's important. I don't know about the two of you. I'm happy. There's so many questions here, and I'll certainly make sure that myself and our team of asset managers will be answering people and getting back to each one personally. And James, a lot of people have asked, will they get access to the different reports? I know that you've got something that we'll share with people, so please watch your emails. James is kindly going to share a link so that people can get access to it. I think one of the things that's really, really important is that, between James and Andrew, we've worked very closely together. And I just wanted to share quickly, and I'll come back to your screen now, James, but I just wanted to share very quickly with people just some of the next steps that they can really look at. And like I said, because I'm conscious of the fact that some people might need to close out this evening with regards to the timing. So if I look at the PowerPoint slides here, and I just want to pull up the PowerPoint slide. Let me pull up R1 here quickly. So I've given you, I've basically shown you with James. I think really one of the things that I think is really important, hang on, what's going on there, is that James has spent a huge amount of time in chapter 2 of our book, Property Going Global. And as I said to you, that was written on the back of Clem Santa and his scenario planning. He was kind enough to do a foreword, and he pretty much said to me, we've got to write the book because of the systems, and having helped over 2,400 South Africans invest internationally, I think that we've certainly got enough track record to give people some guidance in a scientific and systematic way of how we invest. And we will share this book with people if they put in their PGG, Property Going Global. We'll send you the electronic copy. For people that are coming to the breakfast, we will also make it available with regards to the different tools and everything. Now, I'm not going to run through the questions that I set up tonight because we've been asked some great questions already in terms of what we're looking at. And I think really from James and Andrew's perspective, they've really asked a lot of it. There's one or two questions I wanted to ask though. And I love this quote from Confucius. I hear and I forget, I see and I remember, I do and I understand. And one of the things that I've had the privilege of with you, James, and with you, Andrew, is having known you for many years now, having the privilege of presenting with you guys. And to be fair, James, I've been a client of yours for many, many years. And Andrew, I've been moving my money with you for many, many years. And, I think we can learn a lot from what the wealthy people are doing. But what I was really interested in asking was actually this one. And that would be that, we're in the process of putting together our inner circle. And ultimately, it's a collective mastermind where people can come together and would be able to get access to it. And my question would be, would this be something that you would be interested in where, it's particularly if you're a real estate investor, you may be not interested in whether the Rand's going up or down. But there are so many questions coming here on, whether we should move money to Ireland or whether we should, keep the money, or I'm immigrating, or should I do this or should I do that? And, we can't necessarily do a webinar once every 6 months or whatever, but we could do is come up with a forum where people could ask information and get information and get access to James's reports on a monthly basis. And Andrew already provides very competitive rates and everything, but I'm sure Andrew would be able to provide something for people that wanted to consistently have a kind of a mechanism. I know between the three of us, we're looking to build all the functionality so that my dream is that seamlessly one day, Andrew, someone from anywhere in the world will be able to click a button and be able to move money seamlessly through your system, and with James's all the information, be able to plug it in and people will be able to make the right information. But my question is, who would be interested in being part of that? and really kind of being able to get access to this technology and this information, and most importantly, these expertise on a regular basis. So if you are just right in there in a circle, and it will give us some good indication as well as to whether this is something of relevance. We tend to do this, maybe once at best every twice a year. And I just feel that there's so much knowledge here, and it has such a material impact on your wealth. If you hadn't moved your money last year and now suddenly you moved your money yesterday, well, you'd be 35% down. But maybe off what James is saying, if you wait 6 months, you might not, it might retrace back. And these things have a dramatic impact. People spend 20, 30 years of their entire life working to get to this point. And these things, they shouldn't be making gut feel emotional decisions. So, I don't know what Andrew and James, what your thoughts are on this. I'm kind of springing this upon you. But I really think that people no longer want to learn by being told what to do. They want to learn by doing. They want to learn by partnering and participating.
I think, Scott, if I can say something there, one of the things that's important is that each individual needs to look at their investment strategy overall. You need to look at what can you afford to invest offshore? Have you got offshore? Haven't you got offshore? What percentage should be offshore? I suppose it's going to really depend on the individual circumstances, and that's going to be changing over time. So I would take a long-term view on offshore and just make sure, if you look over the last 10 years or the last 20 years, if you look at all those graphs, if you've been just quietly investing offshore along the way, you're never going to look back and think you've made a bad decision, because the Rand, as James said right in the beginning, if you look at the productivity and the cost of labor, long term, the Rand's always going to be weakening. Plus, you add the fuel of bad economic management, et cetera, et cetera. I don't think that's going to change in the foreseeable future. But having said that, it is going to have periods of gains, periods of losses. But if you are going offshore, it's very expensive at the moment. Historically, it's probably the worst time to be investing offshore in terms of the cost of an offshore asset. But just make sure then that whatever you are buying offshore, that you're doing it with the right partners, and that you're investing in something in, say, the US, that in the US rights is a good investment. Don't just buy it because it's US dollars. Make sure that that investment in its own right would be attractive to somebody playing only in the US market.
I think it's very, very, very valuable advice, Andrew, is that, a lot of South African salesmen have been selling stuff to South Africans based on a Rand devaluation, and I think it's complete rubbish. The asset has to stand up on its own 2 feet, whether it's in England, America, Australia, Uzbekistan, or South Africa.
Exactly. And I think, if you're going into some sort of offshore investment, you're not sure, try and find out who's investing in those investments, whatever they are. If it's property, is it only foreigners buying? Why only foreigners? Why aren't local Americans investing if it's such a great investment? Those are the things that I would be asking, and have somebody with a trusted track record who's also accountable to you in SA. I think that's really important. Beware of these foreigners who come in with shiny shoes and silk ties. We've all seen them, and they're the ones laughing. The investors, not always.
Well, Henny taught me many, many years ago, some of the best advice I was ever given is make sure that people's interests are aligned. So if a salesman's on the front end earning a good commission and you're the investor trying to make a long-term return, your interests are not aligned. I wanted to share something with, and it comes back to what I was just talking about, kind of learn by doing. And, we started something just last 2 weeks ago, which I highly recommend. People can go and like our Facebook page, the Wealth Migrate page, where Dr. Dolph DeRuis, one of the most respected international property investors in the world, actually, I toured with him for a week, and we went and looked at deals, and we literally made videos and updates. And, for me, this is the whole purpose around the inner circle, where we're consistently doing, and people are learning and investing and participating and partnering. And I just wanted to, just while I had you online, Andrew, I know that you actually came over with me, and we won't get into all the misbehaving you got up to, but what was your experience of getting on the ground? It's a big, daunting task. Whether the Rand is recovering or whether the Rand is weakening, it's irrelevant in terms of still the thought process and the fear that one goes through in terms of moving money overseas, investing overseas, knowing where to get the information. If you're dealing with James, how to do it if they're dealing with you, and ultimately where to park the money, once it's there. There's a massive amount of fear and knowledge that needs to be. What was your experience in terms of, and I know you've done it not just in America, you've done it in Portugal, etc. So what's been your experience of getting your feet on the ground?
Yeah, I'm the sort of person who would be reluctant to invest without going and feeling and seeing the product and getting a feeling for the environment. I mean, you can buy a beautiful home in London, but London's got good parts and bad parts. And, I think I've got an inquiring type of nature, but not everybody, can hop on a plane and whatever. So, you've got other clients that they could talk to. I know that there are a lot of happy investors I deal with your clients. For me, the value of going on that trip was seeing the depth of information that clients were being exposed to. I mean, I think that particular trip in 2013, unfortunately, I couldn't join on all of it, but I was in Atlanta and New York. But I think in the space of 2 or 3 weeks, I mean, you guys went through an enormous amount of properties, and I think that the other thing that I quite liked about that was the fact that you've got 7 or 8 investors sitting in the same vehicle for 3 or 4 days, flying together on airplanes. It's quite nice for people to compare notes. What I see in a property, maybe you don't. So it's that sort of the power of doing things together. I think is also very attractive, because going off into a foreign market by yourself is daunting, and you as a foreigner are going to pay school fees. I mean, today I was dealing with a very unhappy client who's made an investment in Europe, and he bought a property sight unseen because he was panicking. And I mean, really, he's now been faced with a 70,000 euro bill just to get the property into a habitable condition so that he can get a tenant in there. And he's gone against all the advice that we always give people: is have somebody locally that you can trust and work through a proper network of trusted partners.
Yep. No, it's very much so. I'm glad you touched on that, Andrew. When we first started these buyers trips almost by fluke 4 or 5 years ago, the massive feedback that I had from people was that, I don't want to go with other people. And yet that's actually the greatest thing. In fact, it's the reason I still go on them, is because actually the people you meet and the knowledge you learn from your peers. And, it's the classic example of, I could go and try and learn all about Elliott Wave and figure out all the stuff that James knows. And I would never be as good as him anyway. Or I could just, pay James and get the value for his experience.
Yeah.
It's like a no-brainer to me. You know what I mean? Like, they say in life, if you want to be successful, just copy successful people. So it really is for me, something. I just want to share with some people some next steps. And I know that James, you said that we'll be sending people a link. I think really from our perspective, we love to, our asset managers love to sit with people and really understand what it is they're looking to do, whether it's they're immigrating to Ireland, they want to buy in New Zealand. I had a client today that wants to buy in London. There's pros and cons to that, but you really need to know what you're doing and where you're going. I'd highly recommend people come to our breakfast next week. We've got some very exciting people sharing information, including Hilda Lunderstedt, that is one of our basically our CEO of our global operations. She's one of our board members and one of our largest shareholders as well. She's invested significantly. She's a very, very successful lady in South Africa, a very successful business lady, and invested significantly around the world. And she'll be sharing some of her experiences, pros, cons, the fears, and how she went through it. I know that a number of the different asset managers will be sharing. And I think really trying to unpack all these questions that people are asking. Because, it's one thing to have the information, but what do you actually do with it? And I think, I'd highly recommend engaging with James. I'm not sure, James, from that link perspective, if you can give it to me and I can quickly type it up for people, or what the best way is for people to be able to get that link. I know we're going to email it to everyone afterwards, but if people are super excited right now, what should they do in terms of getting access to that link?
Could you just send it through to you, but if you want to...
Can you put it in the chat box for me? There's a chat box there. Oh, there, you've done it. Okay, great. So you put the chat box in for everyone. So if everyone can go in the chat box, you'll actually see it there. Let me just make sure that it's not just in mine. So what I will do is I'm going... Just tell me if everyone can get access to the chat box. If they can't, what I'm going to do quickly, this is how you improvise on the job. I'm going to just put it in there for everyone. So effectively, you should be able to see the Forex thing there. So it's forexforecast.co.za, and then go /go/free report. So you should see it coming up there on top of the nice sunset. And again, that's my understanding from James, is that for 14 days people will be able to access the report and get information, etc. So I'd highly recommend you go and go and sign up for that and take advantage. Andrew, from your side, what's the best way for people to get hold of you? And I know, I mean, you've got a big team. You're a highly, very busy person yourself. But what's the best point of contact? How do people get hold of you?
Look, my email address is I mean, I'm very happy to engage directly with people who've attended the webinar. So it's Andrew.Rissik at Sable-group.com. But if you Google my name, you'll pick it up. You can connect with me via LinkedIn. But otherwise, an easier one maybe is SA Forex, one word, SA Forex at Sable-group.com, and that goes into my broker team, and they'll look after you and help you with all your inquiries.
Okay, I'm just writing it up here quickly. You can tell me if I'm getting it wrong. Andrew at Rissik Sable group.com. Okay,
that's it. Yeah.
Everyone should have it on the screen now. This is how it works in Africa. We improvise. So I mean, basically, you've got the different contact details there for both of them. I would highly recommend coming on a buyer's trip, particularly if it's something that you're wanting to learn more about. We get multiple people that don't have the time. We've got our next buyer's trip in March, and the beauty is now there's 3 ways you can come on a buyer's trip. You can either physically turn up, which is for a select few. You can sign a mandate, which is what 70% of our clients do, which is where they tell us what it is they're looking for on the ground, and then we go and be your ears and eyes on the ground, which is what Dr. Dolph Terus and I just did in January. And the third one, and the new one, which is really exciting, and if you're interested, just type in there digital and we can let you know, which is where we, the beauty with internet speeds now and mobile connections, mainly in America to start off with, is really fast now, and we can actually digitally do it. And we can give you access to the digital information. Now, obviously, from an order of priority, the people on the buyer's trip get priority number 1. So if there's the best property, whether it's commercial or residential, the people on the buyer's trip get first dibs. The people that have signed the mandate get second dibs, and the people that are virtually engaged get third dibs. But it's just a fair way of doing it. And then the third thing, for me is really get started on your journey. And I use the story. Andrew, you talk about the 10-year cycle. I started investing. I did my first property internationally when I was 22 years old. I'm now 39. I know I look much younger, but I am 39. And I think really for people's perspectives is that you're not going to learn this stuff overnight. I've probably seen James talk. I don't know how many times, but at least 20 times. I've had to be involved in writing the book, and every single time he talks, I learn stuff. And so really people need to understand that when you run comrades, you've still got to take that first step. And, I tend to find that a lot of South Africans tonight might walk away and go, the Rand's going to recover. I tell you what, I'll just sit back and do nothing for a year and wait for it to get back to 10 Rand to the dollar. I personally think that's the worst thing that you can do. If nothing else, educate yourself for the next year and get ready for when there's, massive opportunity, because we haven't even spoken tonight about the economics of the global markets and whether there might be some seriously good buying opportunities over the next 12 months. And you marry that together with the Rand and other currencies for that matter, and it starts to give you different dynamics in terms of what you're looking at. So, if nothing else, come along to the breakfasts, engage with James, talk to the asset managers, talk to Andrew, get set up. Just setting up an account with Sable means you can move your money both inward and outward. And I know for a fact that it's made my life and my wife's life and our business partners' lives a hell of a lot easier, in terms of what's happening. And I will leave
Scott?
you with. Yeah, sorry, Andrew.
Sorry, just on the preparation. I mean, the reality now is that most offshore property investments are over the R1 million mark now. So, your foreign tax clearance certificates are really important. we can help people get those in place. They're valid for a year, and you've got the allowances of 2016, which are valid up until the end of December. So just get prepared, because if somebody sees a property and they want to buy it, transfer is very quick overseas in most of the markets that our clients invest in. And we have had people who, when completion date comes to pay the full amount, have actually not had their funds ready to move and suffer penalties or lose the investment opportunity. So we can help there as well.
I think it's such an important point, and I finish with two last stories, and then I suggest that we will provide a framework or a forum to be able to answer all these other questions. But there is a link there, ipsinvest.eventbrite.com, which is where you can book to go to the breakfast. If you want to SMS, there's a number there where our asset managers can contact or email Jason, and he'll be able to coordinate. We will be getting back to everyone that has asked for questions tonight, etc. But I think I want to leave you with two stories, and the one was the guy in Durban that bought that house back in March of 2013. The rand was 8.88 to the dollar. His good quality friend that works in the bank told him it was going to be 8 rand to the dollar. He was buying that house for $84,000, and what was really interesting is that same house is probably priced today at about $130,000. He would have earned a net income of over 8% all through that process. He would have been building a credit rating in a first world market, and he kind of gambled on the fact the rand was going to recover from 8.88 to 8 rand, and he kind of seriously got that wrong. And even if the rand was to recover to 10 rand now, he's still underwater. So really, I think you've got to really take a long-term view in terms of what's happening, and what is your outcome you're trying to achieve. And I finish with one last story, and some of you have heard it before, some of you haven't, but it's something that is so core and so fundamental to why we do what we do. And that is that, I had two different parents. I had my father and I had my uncle. And my father left Zim in 77. He completely reacted. James, you mentioned that a major event happened. That's exactly what happened. And my parents decided it was time to leave Zim and come down to South Africa, and basically lived a life of reaction and unfortunately quite a lot of hardship in the process. My uncle, on the other hand, decided to turn that chaos into opportunity. At the age of 30, he opened his first offshore bank account. And there was a great opportunity in Zim to make a lot of money. But while he was making that money, he was also investing it offshore in first world assets and first world income. Now, in 99, the Zim economy was the best economy in Africa, and everyone would have said he was an absolute genius. And in many ways, they would have said, why do you invest your money overseas? It's much easier to make money at home in Zim. But in 2001, it had completely turned, and it was the worst economy in the world. And my uncle, at the age of 53, had the ability to buy his way into Australia, to buy a house for cash in Aussie dollars for $1.8 million. He's put his kid through a private school, one of the best private schools in Australia, in Brisbane. And what I always say to people is that he never had to work for an Australian, which I think is probably one of the greatest things you can do in your life. And, I finished with that story, not because it's a sales pitch, but because it's very real to me and my life and my purpose and why we do what we do and why this whole company was set up is to provide people with the options so that they have the freedom to make their choices in the future. And like Andrew said, the government can change things tomorrow morning. I've witnessed that in different markets. And so you need to have the practical realities of what James is saying, whether it's going up or down. But you also need to have the sensible strategic planning to get your house in order, to be diversified, to be across multiple markets, and not be exposed to any one currency, any one asset class, any one country, any one government. Because for me, really, the world is now a global village, like I said, and that's your responsibility. And if you do that, then you can have the freedom to make the choices you want for you and your family in the future. And that's what we're passionate about. And that's why I just want to really say thank you, James, for your time tonight and sharing your incredible wisdom. And Andrew, equally for your time and sharing your incredible wisdom, because I'm a proud South African, and we feel very strongly about empowering South Africans and giving them access to the right information so that they can go out there and live a life of greatness that they want, and rather than live in fear and is the rand going up or down, or are we going to get a credit rating rise or fall, and basically living a life of reaction, which I witnessed personally for my father. So that's I finished with a very personal story, but it's a very real story, and it's why I've done what I've done and been investing internationally since I was 22 and riding the swings up and down, but I was very clear on what my long-term strategy was.
Thanks, Scott.
Thank you, Scott.
Awesome.
Glad to be able to provide some value, I trust.
No, well, thank you very much for everyone's time, and thanks for everyone who's been online tonight. I know it's been a long webinar, but there's still hundreds of people online. So clearly, this is something that is really important to people. And Andrew, James, and I, maybe we should let's have a brainstorm around how we can do this on a more regular basis. If nothing else, providing short context. I'd like to, like I said, to provide systems so that we can provide people real-time feedback. So anyway, thanks to everyone for being online. We will send the recording and all the information out to everyone. And yep, I look forward to seeing many of you over the coming weeks. But most importantly, please go out there, be a proud South African, be proud of what we have as a country, and make sure that you are preparing and being part of the global community and ultimately being a global citizen so that you can have the freedom to do anything you want in your life. Thank you.
Thank you.
Yep.